All right, everybody, this is your man, Jason Myles, back at you for another one. Listen, everybody wants to understand what inflation is. Some of you know, some of you don't know, but it's important, it's imperative even that you understand exactly how inflation plays a big part in your life, my life, and everyone's life, the community as a whole, around the world, not just here in America. But it's even more important for you to understand how you can take advantage of inflation, where you have to move and what you have to do to make sure that it doesn't affect you in the same manner that it affects a lot of other people. So let's get into it right after this. See you in a second. Okay, so where is your cash right now? You know, we have a lot going on in the economy right now. We've got, stocks going up, stocks coming down. They're correcting every day. We've got the Fed coming out telling us that inflation is going to be a big part of our life. We've got real estate that's been, well, listen, it's probably the most expensive it's been ever, right? We've had over 16% returns. Well, your property value has increased over the past 12 months about 16%. Which is absolutely incredible when you look at it across the board. That is incredible. That means if you've got a $200,000 house that you bought a couple of years ago, well, even just last year for that matter, right? That house is now worth $232,000, roughly. But what does that mean for you? I mean, a lot of people got a lot of money over the past 12 months and they didn't reinvest it anywhere. I mean, there's literally trillions of dollars, approximately $3 trillion sitting on the sidelines right now. So what does that mean? Why are they doing it? Why are they not taking advantage of some of this stuff? Well, I can tell you this, they're sitting around waiting for an opportunity to present itself. But at the same time, if you're doing the same thing that they're doing, and you've got, $100,000, $50,000, $10,000 that's just sitting in a bank, inflation is going to eat that up. Put it to you like this. If you've got $100 sitting in the bank right now, it is estimated that inflation just this year is going to be about 3.4%. That means as soon as we get into next year, January 1st, roughly, that means that your $100 is now worth about $96 and change. But what you've bought for $100 is still going to cost $100. You need to make more money to cover for that. So having money in the bank is not going to do you any good. So to put it simply, inflation is the value of a dollar is going down while the costs of goods are consistently rising. So you have to figure out what you're going to do to combat that. We need to understand today how we're going to do that. So what do you need to do to protect your financial self? Well, it's simple. You need to buy assets. Right? Now, if you're buying stocks, if you're putting money in your 401k, you're putting money in your IRA, with the correction of the market coming and inflation going up, those things are going to come down. Those things are absolutely going to come down. Now, if you're an expert stock trader, you're going to know what to do. You're going to figure out what companies to buy and where to put your money, this, that, and the other. But the simple fact of the matter is you absolutely have to understand you have to buy assets, hard assets. And if time has proven anything, it's proven that real estate is the one place that wealthy people are constantly putting their money. I mean, you've got hedge funds right now that have literally billions of dollars sitting on the sidelines waiting for the market to correct itself. Now, a market correction doesn't mean a crash. It means a correction. We get 10, 15, 20% corrections in value. That means if a house was worth $200,000 and there was a 20% correction, it's worth about 160 at the bottom of that correction. Now, you need to understand that that's a great time to buy because you're buying a good play. You're getting a good equity spread for the future. Not to mention the fact that you're going to have cash flow that comes from that as well if you're planning on renting it out. So you need to make sure that you're buying assets. Assets that are going to appreciate in value. Assets that are going to combat the loss of that 3.4% due to inflation. Now, what does that mean exactly? That means if you buy a house, however you buy it, it doesn't matter if you have money or you don't have money. You can seriously take full advantage of inflation even if you don't have money. There are things that you can do, strategies that you can implement that are going to be conducive to your financial well-being over time. So, if you went out and did, let's say, a sandwich lease option, you don't have any money and you got yourself into a deal, and this deal is you're protecting someone maybe from going into foreclosure, someone can't sell it, maybe they owe a little more than what they can sell it for right now, and you put this property under a lease option, and then you lease option it to someone else, hence the name sandwich lease option. Now you can go ahead and start to make a little bit of money. Maybe that person owes 170 on that house and it's only really worth 160 at that time. You can at that point hold that place. Maybe the mortgage is $1,300. You can at that time lease that property out for maybe $1,700, $1,800, depending on the situation. But we cultivate those situations. And now, whatever money you put into it, you're making $400, $500 a month passively. Passively. I talk about that a lot. You can check out some of the other videos that I have that explain how to do sandwich lease options, and how you can implement that in your investment strategy. Now you're kind of hedging the bet because real estate is going to go up. It's all this big roller coaster all the time. It's up, it's down, it's up, it's down. That's what it does, and that's how you make your money. That's where you get wealthy. And it's implementing those strategies that help you get to where you want to be financially. To put it simply, if you bought a $200,000 house, but you got it at $170,000, and you held that thing for 5 years, and let's just say you had 15% annual accumulate. Let's be a little bit easier than that. Let's say just 10% annual appreciation over that 5 years, averaged out, because you're going to have a couple good years there, right? You're going to have some. Now, first year that's 17,000. It's going to compound the next year. The very next year you've got 187,000. It's 10% of that. Now it's not 17,000. It's 18,700. So let's just say that that number comes out to be about $80,000 in 5 years. Whatever you leveraged, you may have only leveraged $3,000 to get into that house. Now that house is worth $80,000 more. You got it at 170, now it's worth 250. If you did that 5 times over that 5-year period, that's $400,000 that you'll have to put in your pocket when and if you decide to sell those properties at the end of 5 years. And you maybe have only leveraged a few $1,000s per property to do it. Maybe you didn't have any money and you partnered with someone and they used their cash to do it. Now your gain is infinite. I mean, you've turned nothing, literally nothing but your knowledge, your know-how, which is invaluable, into a couple $100,000, not counting the passive income that you got over those 5 years and the down payment spreads. So you do pretty good. Okay, so just to kind of recap, investing when you have inflation going on in real estate is a great thing. I can assure you that that is a real estate investor's dream, getting involved in these cycles. We've got real estate investors that have been involved in the ups and downs for 6, 7, 8, 9 different cycles. These cycles make you a lot of money. So it's important to learn how to recognize them. Not only is it important to learn how to recognize them, it's even more important to execute your strategy once you're there, once you see it. Because that's where you really, really make those big gains. You've seen, or at least you've heard about, investors coming out of the financial crash that made millions and millions and millions of dollars in a relatively short period of time, just a few years, because property values went up so fast. From the bottom in 2008-9 to a real significant show of increase in 11 and 12 on into 15 and 16, and of course up to now. If you were in a position to time the market properly, when you bought it and when you sold it, again, you'll make hundreds of thousands of dollars. But I want you to remember the fact that if you keep cash in the bank, sitting there on the sidelines, not doing anything for months and years, it will cost you money. It absolutely costs you money. If you've got that money sitting in CDs earning you 0.2%, 0.3%, even 1% a year, it is costing you money. Because inflation has averaged just over 3% a year over the past decade. So you need to keep that in mind if you have cash. If you have cash, you have to put it to work. But you have to be smart about how you put it to work in real estate. Because yes, inflationary periods are a real estate investor's dream. This is where we make our money. Now, I've got a free book for you. You can learn about these strategies. It's a free book. You just pay for the shipping and handling. The link is in the description here. If you want to get involved with people that actually know what they're doing, that have been doing this for a couple decades and plus, and for some of us, make sure that you align yourself with the people that can share the information with you. Just click the link below. We've got some free courses, and we've got a 30-minute strategy session which costs you nothing to see exactly what it is you want to do, what your attributes are, and how we may be able to work together moving forward. So again, this is your man, Jason Myles. Make sure that you click the subscribe button and that you like this video and share it with people if you enjoy the information. So I'm signing off for now. I'll see you next week. Peace.